My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'll be able to make friends. I'm just here to try to make you some money. My job, not just to educate, but to teach and entertain. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Look, I don't want you ever to take your cue from the stock futures. That's what I was screaming at my screen when the S&P 500 futures soared early this morning on news of a cooler consumer price index number. Now, do not get me wrong. It's great that used cars and gasoline and medical care prices cooled down. We're making progress, real progress in the fight against inflation. But that doesn't tell us much about what the Fed will say tomorrow. They got that big meeting. So who are these yahoos taking the Dow and the S&P up 2% without knowing where Jay Powell stands? And we won't know until maybe 2:30 tomorrow. No wonder those gains mostly evaporated. Dow only finishing up 104 points, S&P gaining 0.73%. More inflation-oriented NASDAQ jumped 1.01%. All of which brings me to a couple of important lessons for you and your portfolio. This morning, my friend Becky Quick asked me a question, the crosstalk I do between Squawk Box and Squawk on the Street. She asked me whether I liked the CPI number. I said unequivocally yes. We're beginning to see prices roll over, and that, look, that's a big positive. But when we got to Squawk on the Street itself, and my co-host Carl Quintanilla asked me what I thought about buying the market up so high, I told him it's a total sucker's game to buy the stock market up 2%, and you're going to be crying. You can't take it up 2% because of one inflation number, when it may not even be. It may not even be the number the Fed's targeting. You see, I think the Fed doesn't care as much about the CPI as the commentators make you believe. Not only that, I wonder if they want to roll back prices, not to where they were a year ago, because they were pretty darn elevated then, but to where they were when the pandemic got started. Well, I don't think they actually want it all the way back. I also don't think they'll be willing to declare victory until they push prices much lower than many are expecting. Well, let me put it this way. The Fed has to start somewhere in the fight against inflation. Today's a good beginning. But if you're Jay Powell, you know what I'm calling this? The regular season. If he wants to make the central bank playoffs, he's got to crush inflation for good. And for that, he needs to beat not commodity inflation, not consumer price inflation, but wage inflation. Meaning he needs to do some real damage to the job market. But from what we can tell, that's just not happening. There's still too many jobs going begging, too many resumes being voraciously consumed, too few layoffs of talented people. Very little of this is captured in the consumer price index. I think he won't stop until he gets this wage inflation down. But other than that bizarrely high, but very needed layoffs from meta platforms, we just haven't gotten them yet. Why? Because demand remains just too darn strong, and that's another problem for Powell. Sure, okay, we finally have housing somewhat slowing down, but not a lot. Look at the stocks. They're going higher. Although when mortgage rates soar, it should slow them down. It's causing a bit of a ripple effect in furniture, hard goods, rugs, the like, but not enough to damage the retailers with the possible exception of Bed, Bath & Beyond. And by the way, they're pathetic, although I actually like mine. Certainly not enough to drive down prices back to where they were 3 years ago, and that's the point. See, people keep forgetting. It's not like he needs them down to where they were last year. He needs them much lower. Housing does indeed punch above its weight, but there's hope that with the yield on the 10-year Treasury going down, mortgage rates will go down with them. Unfortunately, that's actually totally antithetical to what Powell wants. He wants to try to crush housing prices. That's very hard to do when jobs are plentiful. Higher mortgage rates hurt housing, but higher unemployment is what really brings down the industry. In the end, Powell's trying to lower prices by taking interest rates up so high that people are less certain of their jobs. He wants us to collectively hunker down. And while today's CPI reading was a real improvement, it definitely was not by any means a hunker-down number. Which brings me really to the core issue of the S&P 500, what you and I care about. There are so many stocks in this index that will fall if employment collapses. So it's not worth taking the stock market up aggressively at the opening on a soft CPI number. If you think Powell will be moved by a cooler than expected CPI figure, you have not been paying attention. He cares about wage inflation. The only way to consistently ensure, not just 1 month, not just 2 months, not just 3 months, that prices come down to affordable levels is to create a surplus of workers. That's what contains wage inflation, and we're not going to get it from immigration. The law is too crazy here. See, Powell needs to create people, and you can't really do that. Otherwise, what you have to do is lay off people. What's so amazing about today's news flow, though, is that we've got, it was out of body, frankly. We've got this incredible scandal going on. Something like $34 billion missing from FTX because of Sam Bankman-Fried. By the way, arguably, I'm going to say it right now, the worst dressed criminal mastermind in history. Alleged criminal mastermind. I only say that because maybe mastermind gives this guy too much credit. You have to ask if this law school professor's parents taught him nothing. This is their worst nightmare. I am stunned that anyone trusted this guy with a couple of bucks, let alone billions. We know from the SEC's indictment that he used everyone as a part of his con. Everyone, even his folks. Lots of sports heroes, some business people who should have known better. The media in general, because you know why? He was ridiculously available at all times. Where's my cell phone? I could get him. I think every single media person had it on speed. Didn't everyone have them on speed dial? Right? Everyone? Yeah, I thought so. Now, we had some first-class embezzlement here. Hey, no need to say alleged. This guy had a real novel legal strategy. Avoid jail by confessing to the media preemptively. What I find most amazing, though, this was no ordinary scandal. Lots of people got hit. You nail a guy with 8 criminal counts, and what happens to the medium he traffics in? Bitcoin. It goes up. Talk about a J-Pal problem. Either crypto is so rigged that it can't go down on horrific news, or some buyers are trying to take advantage of the fact that SBF's not around. 1 minute he's the JP Morgan of crypto. The next minute, he's just another schlub wearing a Gap T-shirt. This is just crazy. Today should have been a huge victory for Jay Powell on the speculation front because part of beating inflation is draining out the speculative juices in the economy. Yet there's still a ton of juice left to be drained from crypto. But it's nuts that these crypto coins didn't crater today. Can there be that many hackers out there using it for ransomware? Are there that many people who desperately need to launder money or just hate their own currencies that they'd rather store their wealth in fragile digital assets that could vanish overnight? So I think there were 2 things at play today. One is that there was nothing in the CPI that indicates that wage inflation has crested and unemployment has started creeping up. And 2 is the single most speculative asset in the universe, if I dare even call it an asset, actually went higher. Next thing you know, I'm not kidding, we'll see non-fungible tokens go higher or even fungible ones. It's insane. We're not going to get a stock-free lunch here. We can rally, but we're not going to put it on 2% ahead of a Fed meeting because the average stock simply is not worth 2% more after a softer-than-expected CPI number. There were enough stocks that went down today over concerns that there'll be people who can't pay their bills, as there were stocks that went higher in tech because interest rates went down, and those two are strangely linked. Bottom line, without a well-deserved crash in crypto and a sign of higher unemployment acknowledged by Jay Powell, this CPI reading has to be treated as a one-off number. A good one, sure, but it's a regular season win, not a playoff win. And Jay Powell, he still doesn't have home field advantage. I think we should take calls. I think we should go to Mike in Minnesota. Mike.
Hey, Mr. Kramer.
Mike, what's
booyah. Appreciate you
Booyah.
taking my call.
Jimmy Chill says booyah back at you.
Right on. My question's on MongoDB, ticker MDB.
Yeah. Well, let me tell you something. This is one of those strange things, Mike. This quarter was good. Was it fantastic? No, it was real good. It was a good quarter. It wasn't the greatest quarter ever. It was a good quarter. But because we're so starved for good quarters when it comes to the kind of software that we're talking about, this enterprise software, everybody was happy, and the stock keeps going higher. To me, I would, to use the high parlance term that I learned in school, sell, schnitzel a little. Without a crash in crypto and sign of higher unemployment, this CPI reading has to be treated as a one-off number. Now, on Mad Tonight, hey, maybe you're looking for a good utility for your money in this market? I'll tell you the utility space could do the trick when I reveal the top performers in the space for 2022. Then black gold's been on a slide, but tonight I'm drilling down to the energy space to extract a clear view of where it could be headed next when I go off the charts. And then I got a good one for you. Yum Brands, host of the most recognizable restaurants in your neighborhood. Tonight, I'm getting a taste of the company's potential after its investor day when I sit down with its glorious CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.